All right, folks, thank you for waiting. Really appreciate it. We're going to get started here. Thanks for joining us today for our tax prep uh, presentation today, hosted by Julia, our Ask the Expert host. She's got an extensive background in bookkeeping and accounting support, including CFO services for large and small firms. She also specializes in unique and complex accounting needs for excuse me, for interior design firms and showrooms as well. And she also provides comprehensive procurement services for designers and showrooms as well. At the end of this webinar, I'll go ahead and give you some contact details, not only for Julia, if you'd like to connect with her, but also with our support team if you have any further questions or need any help with anything with Studio Designer. With that being said, Julia, I'm going to hand it over to you. You can share your screen and jump in whenever you're ready. Thanks for doing this for us again.
Hi, how are you?
I'm doing good. How are you?
I'm doing well, thank you. Let me just share my screen. Good morning, everyone. Good afternoon. Anthony, just confirm you could see my screen in here, please.
Yep, looks good.
Perfect. So as Anthony mentioned, we are live Q&A. So at the bottom or wherever your Zoom command bar is, mine is at the bottom, there's a Q&A box. So similar to the chat box, but just make sure that you're in the Q&A box. Please submit any questions that you may have. The focus of today's session is really all about tax prep, but we could certainly pivot and discuss any studio questions as well, especially if they're applicable to something that we're talking about. So as many of you or some of you may know, the partnership and S Corp returns are due Friday, so super exciting and fun. Those of you that are an LLC and taxed as an S Corp, so your returns are also due on Friday. As a reminder, Studio's financials are accrual based only, so just make sure that you are doing the double check or talking with your tax preparer to ensure that they understand the Studio financials are on accrual basis and there isn't a toggle. So in Intuit products, so in QuickBooks, both desktop and QuickBooks Online, there's a simple toggle that turns cash reports into accrual and vice versa. And so our reports in here are accrual only. So if you go into your legacy reports, this would be a good place to start. You should be pulling a balance sheet and an income statement. There'll be some preparers who look for something called a trial balance, and then some who are looking for your entire general ledger. So let's actually just start with balance sheet and income statements. Also, remember that before you run these two, all of your accounts should be reconciled. So accounting reconciliation tab right here. This is a test database, which gets a little tricky at times since nothing's reconciled ever. And it's super fun to see I think our cash balance on something says like, I don't know, $3 million or something. Here's my balance sheet for end of year. I don't like to see zeros. I always turn them off. Here's my fake Citizens Bank account. It has 2.3 million. And there's another, I mean, I am very diversified in banking, which I don't know if I would recommend. A lot of work on the accounting end. But make sure that, so start out by either going into your reconciliation screen or pulling up the balance sheet report. So remember, the balance sheet report lists all of your assets and liabilities applicable to your entity. The asset accounts up here should all be reconciled on a monthly basis. And so at the end of the year, here I am in Bank of America, and I'm going to go to December. And I would put in my beginning balance, I would put in my ending balance. My ending balance here should tie to this number here. If it doesn't, that means you have something called a running balance issue, which is difficult to demonstrate when you're in a test database because there's no real bank statement to compare it to. But in Studio, again, a little bit different than an Intuit product, you're able to reconcile periods without closing a previous period. So if I have questions from November, and I emailed the firm to say, I have these couple of questions, please get back to me. But I know that I communicated it to them and that I'm waiting for their response. I can, though, go in and continue reconciling and work on reconciling December. So I'll reconcile December, and so I'll put in a beginning balance here, positive number. No, what did I just enter? 1.2 million. I'll check off all my receipts, all my disbursements. And then if you notice, and so again, this is an example, but this number here doesn't tie to this number. And so this column, when you're reconciling, is only applicable to the current month. And the statement date is the current month. But this column here is all the reconciliations ever, and they're compounding. They're adding one after the other, after the other, after the other. And so you do not have any issues when this number here equals this number here at the end of a period. If they're off, I always say, if it's immaterial, if it's a couple bucks, don't worry about it. Don't lose sleep. It matters, but it doesn't really matter in the grand scheme of everything. If they're significantly off, that means that you have an issue in a previous month. And so the best thing to do is go through each of your months. And so this is something that really should be done, I would say monthly, but if this is something you've never looked at it, try to look at it for December if you have time, especially right now you're in the middle of either filing your return this Friday or filing the personal return if you're a Schedule C on 4/15. I don't have any concept of what day of the week that is. Oh, Monday. Super fun. Double check that these numbers make sense, because if they don't and you have an issue, it's a lot easier to catch it, the sooner the better, right? And to make an adjustment. So let's say you go back through November and you notice, and so you put in the beginning balance again, you compare this number to this number. And so here you notice that you're off by you're off by $52,000 and $52,534. And you go to your statement, you pull up your statement, and you notice you forgot to put in a deposit. Or actually, this is a withdrawal, it's the other way. You forgot to, you paid your American Express and you didn't put it in here. This is why we're double checking these two. And so if you catch it in 2023 and you can identify what your issue is, you could post it, right? Post it into your general ledger and then you could reconcile it. Now, remember, 2022 is closed. And we have no activity. Let's go to an account. If all of 2023 actually equals, meaning the bank balance and the running bank balance, the reconciled bank balance and the running bank balance tie, try to go back as far as you can with the bank statements that you have on hand. Let's say you identify the problem in November. In November is closed. You won't be able to make any changes into November. You won't be able to void transactions. You won't be able to add anything into your ledger. But what you can do is email support, and it would be incredibly helpful to include screenshots and to be able to say, support, I identified, a running issue. It's however many dollars that occurred on 11/30/2022. I'm trying to file my 2023 returns. Can you please post this adjustment into 1/1/2023? So the sooner you catch something like this, really the better. And so here's your balance sheet again, as I mentioned in our test database, we have a lot of. So we would be looking at this for all of these. I'd go to not in any type of order. So citizens, I don't know why we have store credit in here. We shouldn't. I talk about it every time. I should just get rid of it. I would compare all of these to understand where I'm at. Hopefully I don't have many issues. And then at that point you would decide, does it make sense to hold up your return? Especially if you're due on Friday, it may not. If you can't have an adjustment posted into 2023, make sure to let support know that you've already filed 2023 taxes and that you want that adjustment posted into 2024. Asset accounts are usually actually, I would say, relatively easy, right? You're marking off cash receipts, cash disbursements. We have a couple goofy things in here. Suspense is a really great account used for adjustments. I know we've used it on many webinars before. And I actually always recommend reconciling suspense. So if you notice, I did do that. And so suspense is used as more of like a clearing account. So a place to allocate both debits and credits, right? Pluses and minuses. But the pluses and minuses always need to net zero. So if you look at all of these transactions have some sort of adjustments, and you could see there's a refund, money moving from a client to a project. This is actually a client, this is a project. So I moved it in client deposit. I didn't want to impact a cash account. So I threw it into suspense. So I didn't have to, it didn't mess up my cash receipts and my cash disbursements here. Something having to do with draw, maybe it didn't happen. Refunds, line of credits, etc. But so suspense is a great tool. You could reconcile suspense, which is what I did, if you notice, on 12/31. And then I have here's another one. Then I have all the rest of my issues. That means I use suspense, but unfortunately, I used it incorrectly. So here I'm quickly saying plus 750 minus 2,500 plus. And these are all of my items in question. Oh, look, here's another one. So I'm reconciling as I go. Nope. Oh, I have another one. And hopefully from here, you're able to identify it's funny, journal entry to tie into tax return. Why would I put a random 50? This, oh, I was trying to clear it on deposited funds. So I cleared out on deposited funds. I put something in suspense. Really solid. These would need to be cleaned up, right? You certainly wouldn't want to turn in a financial statement with this type of dollar value in suspense. Baker credit was a way for us to track a credit that we really do have with Baker, the furniture company. Well, it's incorrect on our chart of accounts. It's under furniture and fixtures, and so some of this you may not know. But if you send it to your tax preparer, these are questions that they should be asking you. So either then they can help you through it, support can help you through it, but to try to really understand and to verify before you file your return that these aspects are correct. So our liabilities down here are below. Here's all of our credit cards. Again, we have a lot, and with every single bank under the sun. And then lines of credit. So credit cards reconciling right up here, same thing. Remember, your beginning balances are negatives with credit cards because they are liabilities. So if I'm under American Express, this would be, we don't owe them a fake $1 million, but this would be a negative number because my American Express, if you notice, my running balance is always a negative. I owe them money, so it's not a positive number, it's a negative number. And this number should end in a negative too. In this screen, even though your bank statement or your credit card statement ends in a positive. So hopefully that's self-explanatory. I know that can be a little bit confusing. If you did really overpay your credit card, if there's a credit or you accidentally paid it twice, and your credit card statement ends with an overpayment, meaning a negative dollar value, this screen will always be positive here. So keep that in mind. Reconciling your line of credit, please don't forget to do that if you have one or any type of bank loan. So here we are with the EIDL loan, and the Chase actually should be a short-term liability, not a current, not a long-term. But make sure you're reconciling all of your loans, especially anybody who has right now an EIDL loan. The accrued interest should be accrued in your financial statement. If you started paying, it depends on when you started paying down the principal, but make sure again those adjustments are posted accordingly. I don't know what we have here. This is so I made an accrued interest payment from January to November. I have to log into my portal, which is never easy to do, to figure out what was owed for December. We can talk about client and vendor deposits. Maybe we'll save that after we look at some things on the income statement as well. So let's pivot to our income statement. Let's look at January through December. Now remember, look at this. You should be hopefully looking at this quarterly, but if you're looking at it end of the year, again, make sure everything is reconciled first so that you can ensure your administrative expenses down here are correct. This is accrual, right? Even though it doesn't say that anywhere on here. So this revenue here is only recognized upon invoicing. This time billing, if it's gone through the time billing screen, you're only able to issue time billing invoices with an invoice, not a proposal. And then these are reimbursables. Cost of sales, right? So these work in conjunction with your invoices. And so this is all from your item screen. So when I go through an income statement with someone, I always explain to them that this top part is item screen related. And this bottom part is also item screen related. So there shouldn't be any adjustments. All the information in here should be coming directly from this screen in here. So once you invoice any of your items, your sales codes are the driver, right? They talk to this report, and then all the information in terms of margin and markup live right here as well. Now, it may be a little bit late, but you have a little bit of flexibility with administrative expenses. Really make sure you're capitalizing on your deductions. So depending on which type of entity you are. So are you an S Corp? So if you're an S Corp, you're on payroll. If you're on payroll, do you have a retirement account set up? Well, I'm assuming then a 401k, because most likely you probably have staff. If you're an LLC, do you have an IRA set up? Do you have a SEP, or do you have a simple? They have different limits. So there's reasons to have one versus the other. Typically, and I'm making sort of a broad statement, but with retirement accounts, if you're making an additional contribution, especially with a 401k, if you're able to do profit sharing, you can accrue it. Meaning as long as you haven't filed your taxes. So we're doing this analysis and we're doing these calculations right now for some of our returns that we're filing by Friday. So somebody's an S corporation, they took a salary and they were still profitable. So they still made money down here. So they may have salaries expense up here, which we don't have. Oh, yes, we do. We have salaries, which we took through, right, W-2 wages. We paid taxes on it, Medicare, Social Security. And this was our ending year net profit. We did great. And our salary is way too low in terms of this number, but that's okay. We didn't know. So this was our end number. And so we're filing our taxes by Friday, and we have a retirement account set up. We have a 401k, and our 401k allows us to do profit sharing. So we were able actually legally to contribute 25% of this number here up to $66,000 as a profit sharing contribution. What does that mean? That means that's a deduction. So actually, let's show you. So that's a deduction here on your income statement. It's a benefit for you down the road, but you're not paying taxes on it today. And we are accruing it, right? We're accounting for it in the previous year, and we're paying it. So the stipulations usually with additional contributions like that, and the same with IRA accounts, is that you're able to, as long as they're properly recorded on your financial statement, you're able to pay them up until the time you file your taxes. So anyone with a 315 return, we made some additional retirement contributions Monday, yesterday, and a couple today, because I want to make sure that I'm paying that before, I don't know what account. So I don't have retirement contributions. I am an S Corp because we have payroll, like you saw. Retirement contributions. I'll renumber it alphabetically because that drives me crazy in my chart of accounts. So I want to make sure that so here's my retirement contribution. I'm going to make a blanket 25,000. I always put in a reference number, 12/31/23. Sometimes I do my initials, so we all know that it was me. What is last year? So it's 2023. I can't believe it. And so I need to create a new payable. And so I do have a 401k. Again, I'm making this up, but I do have a 401k. So I'm going to throw that on as a liability, and I'll pay it today. So I'll release it today. I'll release the liability, but I'm capturing that. And let's rerun our income statement. So that's a really great use of a tax deduction. Now, if you don't have retirement accounts set up, and you didn't have them set up in 2023, you cannot retroactively go back and make any type of adjustments, because the account does need to be in place. And so remember the three biggest ones that are most common: 401k, IRA, and then there's SEP, and then IRA simple. So those are the three, I would say, most common ones. So look at your plan documents. That would dictate what type of contributions you are able to have. If you don't have plan documents readily available to you, I would like all of the big, like Vanguard has IRAs, and so your plan documents should be listed somewhere in there. Fidelity, right? Like, so you are able to to find them. It may be difficult, but it's possible. And so here's my liability. I don't remember. I think I said 25,000. I'm throwing it back into the previous year. I want to capture that tax deduction. That's really, really important to me. And then if I rerun my income statement, I was at 450 something, and now I'm at 428. And so right here's my, oh, I'm out of alphabetical order, which is why you should never do that. I need to renumber, right? It went in as a 1, so that'll pop down into the R's. Again, I'll pick it up on my taxes. And if we look at our balance sheet, it's going to live there until I pay it, and I'll pay it at the same time I file my taxes. So that's something to consider when we're doing reviews throughout the year or at the end of the year. That is something we're looking at, I would say, pretty consistently. I mean, you could get into the weeds with it to say, well, what kind of account do you have? How is it managed? What are you investing in? But that's definitely for another session. And so where's my liability? And so here's my liability. Actually, let's fix this Chase line of credit because it's driving me crazy. So again, something to consider if you were not a 315 return and you did have an account set up for last year, 2023, you are still same thing. You're able to contribute up until the time you file your returns. And if you go on extension, Chase, is that what I said? If you go on extension, the same rules apply. You're able to contribute to the previous year up until you file your tax return. So if you go on extension, you have until 9/15 or the 10/15 deadline, which is really, really great. Okay, this is not a long term. This is a current. And then if I know how to spell challenging, I like the reference number, right? The reference number is what dictates. I don't know if anyone else reviews information this way, but I do. The reference number dictates the way the accounts populate here, but they're set up in Studio, which is fantastic, to be alphabetical. So then when you set up new ones and they're not alphabetical, I don't like that. And so 401k liability is also right, current liability down here, and we're going to throw it into 2020. Okay. So 2026. Let's go back to our, and let me know if you have questions. I know that, and that can be very case specific, right? And database specific in terms of different scenarios, but definitely if that's not something you've done in the past or looked at in the past, try to take a look at it for this year. It's never too late in terms of, right, we're in 2024. You could set up a plan for 2024. I personally like pre-tax retirement contributions. That's just a personal preference. Some people do like post-tax. I think at the moment there's, I'm looking to reduce this number, and I typically am looking to reduce this number throughout the year, right? So what are we doing proactively throughout the year to make sure that either A, we budgeted our tax estimates to be at 500,000, 400,000, that's the old one too, right? What can we do to reduce that proactively throughout the year? This is something that, again, we're looking at more in Q3, Q4, even now in Q1, especially if somebody has enough cash to cover a contribution. We're definitely doing that. And then throughout the year, something to think about too is if you have staff, something like staff bonuses, right? So you do need the cash for that for sure, but there is that is a deduction to the business. It's a great benefit to employees, especially if the firm is doing well and the staff is doing well. And so the 3 years post-COVID, 20, 21, 22, or even, right, well, 2020 was I would say a hairy year, right? There was a quarter that was probably super slow, and then it picked up towards the end. But 21, 22, and 23, we've seen a lot of firms be cash positive and really cash heavy. And so the conversation during the year has been about tax planning and understanding where this number is. And so how do we decrease this number by being creative, but appropriately, and helping and having good relationships with our staff. So again, if you have the cash, think about that, and you could run a calculation to say, okay, well, if I do a $50,000 bonus run for all these people on staff, what does that do to my tax consequence, right? So what would I be paying on $450,000 in taxes, and what would I be paying on $400,000 in taxes? A lot of times that's enough of a calculation for a firm to say, you know what, this is the right decision. And I threw out, I threw out just a generic number, but definitely something to think about on the tax planning side throughout the course of a calendar year. 2024, I do personally think is going to be on the lighter end in terms of revenue, and then that usually dictates to net profit down here. So a little bit less room, but quarterly bonuses are a really great way, actually, and I like them as a tool. So that way you don't have to overcommit to salaries, but you're still able to make employees feel valued, right? And again, there's a tax deduction part of it as well. But that way you're not overcommitting yourselves to higher salaries year after year after year, but you are able to continuously increase compensation to staff. So also just something to think about. Okay, so the goal of looking at this at the end of a year, and hopefully you're doing with the tax preparer, is to really understand your expenses and what additional expenses you may have. I think circling back actually to the S Corp return, and this would only apply to an S Corp, but you are able to add, and again, you have to make sure you're doing it correctly, but if you have minor children, you are able to pay minors up until the standard tax deduction. You are able to issue them a W-2, a salary, up to the standard deduction. They don't have to file a tax return on it. You don't need to pick it up on your personal taxes. And then again, it is a benefit right here in this section. So if that's if you are an S Corp, or if you're an LLC and you've been thinking, right, you're growing and you've been thinking about converting, also, it's a really great conversation to have with a tax preparer. And again, at this point, it'd be too late to do it for 2023. But as you're sending somebody your 2023 information here, you could also pull your 2024 to say, okay, here's my income statement for 2024. Here's my interim, right? So the first quarter, I'd never like my zeros. Let's discuss, and you'd have to have a sense of where you are volume wise too, but does it make sense for me to transition? Again, that's definitely a conversation, and that's a math equation too. A lot of that depends on your personal tax situation, but something to, if you've never explored that conversation, pose the question, definitely have it, understand what it means, pros and cons, as well. So I don't know, is this the new one? So as you see, right, we haven't invoiced that much in fake database land. Should probably go in and invoice a bunch of my items. So bonuses, again, right, we talked about bonuses, we talked about retirement, two things to consider for tax deductions. We talked about reconciling. Everything starts with reconciling. I'm sorry, I know I say that often. And let's actually look at client deposit and vendor deposit here, because this may not only be a question from your preparer, but this is also something that you should really be aware of. So let's see. Here, I think I must have 7 income statements open. Go to the client deposits. Let's see. So go to legacy still, and client deposits here. This is my favorite client deposit report. So if this isn't something you're looking at monthly, which monthly, I don't know if I would. If you're looking at things monthly, I don't know if this is the report I would push for that. But if you check in on this quarterly, and then worst case scenario, definitely look at it annually. And so so our client deposits here say 3.881 million. And so what does that mean? Client deposit, we put in the same date. I only want to see, at least for right now, information through end of the year. So here I am. Oh, did I get rid of zeros? Include zeros. Ugh. Anthony, I need this to be a company preference.
The zeros?
Yes, I fight with it all day long.
I'm doing my best, I promise.
I'm telling you, I'm sure it's probably just me. It's really, it makes me laugh, actually. So sometimes you need a chuckle.
If it's any consolation, how you are going through this tax prep process, it makes starting a new business not sound as scary. So if that's any consolation.
Oh, good. I'll sit here complaining. Um, no, I really, it doesn't, sometimes it just really makes me laugh because every time I rerun a report or then I export it into Excel, I'm like, look at me go and not remembering what I talk about. So client deposits in Studio can be tricky. I really do, and I don't think that that's a bad thing. I just think you really need to understand what this is and why it's so applicable to your, not only your financial statement, to financial statements, because it's on your balance sheet, but then it rolls forward onto your income statement. So let's just regroup. So here's client deposits. It's listed down here as a liability. Well, why? And what is it? So client deposits are any money collected from a client that either, and it falls into two buckets. It's either not been invoiced, meaning the items, there's money on items and those items haven't been invoiced, or it is living in their retainer account, in their funds available account. In the desktop database, it was called client deposit, which is where this report comes from. So in my brain, funds available is still called client deposit, and then deposits are called proposal deposits. But they are made up of two, I would say, slightly separate groupings, and again, equally as important. So let's look at our friend Tom Hanks. Tom Hanks has been sending me buckets of money. He's a super great client. It's super easy to work with. He just sends me money, and as you can see, I have $890,000 in funds available, and then I have money on proposal. And so there's a lot of information that can be derived from this one report, honestly, not only for taxes, but even throughout the year. Understanding your cash position can also be tricky in Studio, and understanding this report greatly impacts your true net cash position. That actually may be a really great webinar topic, Anthony, because it's specific calculations and specific reports to get to that place and that net number. But from a year-end standpoint, one of the first things I do is I look at my client deposit here, and then I run the subledger. So this is a financial statement, and all of these accounts have subledgers. So all of these accounts have all of the pluses and minuses, the debits and credits, associated with each of these accounts, and then there's totals. And so do your subledgers tie to this financial statement? If you've never done this and you go do it, you may find that the answer is they don't. And that's okay. That happens. Ours doesn't in here. We have this discrepancy. So if you notice my client deposit, and that's why the year is so important, right? I ran this as a 12/31, even though this doesn't tell you that anywhere. I ran this as a 12/31, and so I'm at 3.886, and here I'm at 3.881, and I have a discrepancy. And you could try to find the discrepancy. You could utilize accounting, general ledger. You could throw in client deposit in here and try to see if there's a time period, right? Like I really recommend looking for things by month because it just narrows down the amount of entries. That could be helpful to you. If you are able to narrow it down, email support, let them know. I found this, here's the number, the discrepancy. I was able to give them as much information as humanly possible because that'll help them. And if you're not able to find it, I would definitely still say email them because maybe then they'll be able to assist you with that as well. So we don't tie. Okay, that's sort of problem number one. But then let's understand why we have 3.8 million and what does that mean? And so 3.8 million is made up of $900 on proposals. So that means we have items in Studio. The items in Studio have dollars, client payment dollars tied to them. So let's go to one. And those items haven't been invoiced, and that's okay. Hopefully there's a reason for that. Maybe they're work in progress. 19th Street, right, that did have a little bit. Go to item list here and actually throw all of your items that don't have an invoice to the bottom. And so this has a payment on it. This hasn't been invoiced. It's a test nightstand. It has a proposal. This proposal is living in this number. So here's all, and you could pull different reports then to understand. And this is something that you should be doing throughout the year as you're managing your projects. So if you're like, shoot, Tom Hanks has been installed, right? They installed 6 months ago. They installed in 2023. There shouldn't be any money in proposal deposits. What's happening? So you could go into this screen, right, which is what we just did. I threw all of my items down without invoice numbers, but you could also go to your 2010 report, all-time favorite, and go to 19th Street and just filter off any item that is invoices blank. And this is also a really more consolidated, I said invoice is blank, but did I not say that? Invoice, is not blank. I meant to say invoice is blank. This is a consolidated way. You could even go another step further and say invoice is blank, and then there must be a payment on it here. And then that will show you items with just payments on it. So again, do you need to look at this every week, every other day? No, but you really absolutely, close of a year, but checking in it quarterly, usually I find it to be incredibly helpful because from there, you'll be able to catch things like that. Well, I know Tom Hanks was installed. How come everything wasn't invoiced? And maybe there's a reason for that. Maybe there's all this vendor credit that's still open, or maybe there's the client is returning some things and you're figuring that out with them. When you're closing out a project, funds available does need to be 0. The other thing to keep in mind is true funds available here. And so this is a scary number a bit, right? But this is saying that we have $2.9 million of client funds that haven't been spent. So our balance sheet should reflect $2.9 million of available cash. If this total cash number is less than this total cash number, you have a problem. Something happened. It's a number of things could have happened, right? But something happened. So right, you don't necessarily have to escrow this. Some people prefer to, but I don't find that actually to be the most common method. But this is something to keep in mind throughout the year. So let's regroup. We don't match. That's a problem. That's sort of separate and apart. Would I keep that from filing my tax return? That's a question we get all the time. And it's so funny. It's so not black and white. Maybe it depends. How big is it? How big of a problem is it? Is it 7 years old? So if I start pulling my balance sheets for, like, if this is something, again, you've never done, do this for December 2022, and pull the client deposit for the same December 2022. And I actually think we've done this, and I think our issue goes back, and it's the same dollar value for years. And so if that's the case, I don't know if I would get too hung up on it. I would solve it moving forward for sure. So what's my difference? 3886350. Oh, I did something wrong. 388635011. 493250 is my number. I keep opening these and then lose sight of which ones are the balance sheet. December. If you're able to quickly or something, if you remember something like, oh, you know what? I know I messed up. Oh, you know what? There's another thing to look at, a client deposit. Sorry. I know I messed up this client deposit 3 years ago, and I know I couldn't fix it, or I couldn't find anybody to fix it. If that rings a bell to you, then I would try to find that time period. But that's also pretty indicative. Like, okay, I filed tax returns before the subledgers haven't tied. I'll put it on my short-term list of things to do, not long-term, short-term. Oh, I pulled my stupid zeros. Oh, okay, that's okay. I just need the total. Minus 2618,253.49. Yep. So I have the same. So in 2022, I had the same 4932.50 as an issue. I don't know what the issue is, no idea, but it's an issue. So I could, again, I could continue going back. The other thing actually to really, again, do it at the end of the year, try to do it quarterly, but is a great spot check on this report. This report is, notice, so Citizens Bank is really a vendor. I mean, they're a cash account for us, but they're a vendor. And so why is Citizens Bank Citizens Bank on here as having money and funds available. And so the answer is, well, this is incorrect, but what it means is your cash rec is most likely correct. I'm assuming that it is correct, but your payment method was incorrect. And so if you see vendors on here, that usually means that somebody, and so let's do one. So, and let's actually do it through Citizens. I'm in Citizens Bank. As we know, Citizens won't come up here. They're not a client, but if you search for them, they will. And so you needed to take money from your Citizens Bank line of, and so I went to Citizens Bank in here, meaning I transferred the funds, great. But I also then went into Studio to attribute or to account for the transfer. I'm going to throw this into 12/31/2023, and I'm going to deposit it into my, oh, I should deposit it into my bank account, and I'm going to put $25,000. And so look at this screen here. And I'm going to say it was a wire, 12/31/2023. And I can't receive and apply, right, because there's nothing to apply to, but I can receive it. And so when I receive it, it seems like everything looks good, right? So I'm going to post. And so if you notice though, so I posted it into cash, which that part of the entry, the debit is correct, but the credit is living in funds available. And you wouldn't necessarily catch that on just a bank reconciliation, but you would absolutely catch it if you're looking at this report. And so what needed to have happened is you needed to have used the received miscellaneous payment, and this account needed to be your Citizens line of credit, and this needed to say 25,000. Well, let's actually just do a different number. I mean, we're sure we could do it today. 4. And if you notice, when you do it this way, receive miscellaneous, this number doesn't go up. So these two, and so now we have 2 in there. We've increased client deposit on our banks, on our balance sheet. So this is the subledger that shows. Our cash rec ties up here. Our line of credit rec wouldn't have tied, and maybe we wouldn't have been able to understand why. So if you notice, this is 50,000, but the remainder. So if you look to see what that is made up of, again, sort of putting it like pieces of a puzzle together, right? So you would have noticed that something was wrong with your Citizens account, line of credit account in here. These are different draws. Let's what did I do them as? I did them as positive 25s, 25. Oh, and I did them on the end of the month. Here's my received client payment. And so, right, if you notice, this other 25 isn't coming out of Citizens line of credit. So if you're reconciling your line of credit statements, you would have caught that, but if that's not something, again, that's standard, you wouldn't have. But again, another really great place to double check it is this report. So Citizens Bank stood out to me. We do, I think, see in some places some vendors in here and dollars tied to funds available on the vendor side. And so again, that just needs to be fixed. It needs to come out of funds available. It needs to get moved to the appropriate location. Was it a Verizon Wireless refund for something having to do with your telephone? Did you get a commission from our house or Lee Industries, and you didn't realize that you used the receive payment option instead of the miscellaneous payment option? And then so when fixing it, you need to take money out of client deposit and move it into the correct expense account. So when we teach money in, so where is money in? Accounting, always just remember, I think it's actually makes it really easy. These top 3, these are client related. This bottom one, again, I would say typically is nothing having to do with clients. So if you know that it has nothing to do with the client, just be in the habit of not using the top 3. I wonder what Eric Canada is. Oh, and it's a 0. Because look, I didn't filter them off. Okay. 2022, let's close this one out too. So 2023, so we took a glance at client deposit. We saw some errors. Well, let's also look at accounts receivable because that has to do with client money. And then let's look at vendor deposits and accounts payable. So accounts receivable is any money that's owed to you from clients, and it's through a period of time. So let's go to all. Let's type in accounts receivable. By invoice by item, let's throw in my date. And so because we're accrual basis, these invoices, meaning these ones on the report and any invoice in the system, will stay open and show open, live open for all eternity until we do something with them. And so anytime we create an invoice, we recognize revenue. If the invoice is for a $0 value, because that particular client paid on a proposal, there will be an invoice generated for $0 that recognizes just revenue and cost of sales. That's great. That's finishing the item cycle. If there's a client that owes you money and you create an invoice, as you can see, we have a ton of old stuff in here. If you created an invoice and there's a dollar value associated, and you know, for whatever reason, and you shouldn't have a lot of these, but it does happen, that the client's not going to pay, take the time at the end of a year. Again, quarterly is better, but if you've never done it, end of the calendar year is amazing. Take a look to say, you know what? I don't know what's going on with this fancy armchair, but they're not going to pay me my $5, $6.03 on the balance of this fancy armchair. And I need to get rid of that because this fancy armchair, so this invoice, oh my golly, these 7 invoices, they were picked up as revenue in 2021. If I filed my taxes on an accrual basis, I would have recognized that revenue in 2021, but I actually never got paid for it. So I really want to make sure that I reverse these entries. And so you could void this invoice, depends on if there's client funds on it. That would be a determining factor for me of if we void. Or you could also close them out to bad debt. That may be an easier solution. Let's see if this client is, oh, they're here. I don't see any open. That's not a good example. Let's go to something else. 045, let's see what's going on. You could close them out to bad debt. 045 is not active. Super fantastic. 19th Street is my actual active client, and they have money in funds available, so I don't want to use that as an example. Let's try Arbor Creek. Closing out to bad debt is something up with my filters. What is going on? Hold on. Okay, let's try again. Maybe just needed a refresh. So Arbor Creek is showing these open with 20, well, it's $1.40. But this $1.40, right, is living on this report and has been for 3 years now. And so Arbor Creek is down there installed. They're not paying me my $1.40. What I really want to do is clean up that entire project. I want to make sure my 2010 report is clean so I can make them inactive and I could close them out and move on. So I'm going to close $1.40. Actually, what is this? Oh, that's 2024. So I guess I can't close this out because look, and even in the fake database, it's still active. That's really funny. But I am going to close this $1.40 and they have money and funds available. This is a bad example. Really want to find one that's applicable. Go to East Mercer. Because if somebody has money and funds available, I don't know if I would necessarily close them out to bad debt. I would prefer to have a conversation with whoever's running the project to say, okay, we need to get rid of this. Okay, look, Mercer doesn't have any money and funds available. This is old. I don't know what happened. Maybe they never paid me. I don't know. But I picked it up as revenue in 21 and 23, actually. But I know I'm not going to get paid for it. So this is $9,000. So I would have paid income tax on $9,000 in a way, right? There would have been cost of sales associated with this and with this. This is time billing, but I want it to be correct. So I'm going to close this out to bad debt. And so when you close out to bad debt, the only negative to that, and it's not necessarily a negative, but it's just, I would say, slightly skewed information, is that it increases their funds available. So if this is easy in Mercer because they don't have any funds available, but if you were then trying to understand how much did a client actually pay you, you would really need to evaluate that payment application report to say, oh my gosh, the payment application says that they paid me 1.2, but if I look through the detail, I could actually see they paid me 1.1 because we closed $100,000 to bad debt. So again, not necessarily bad, but just, I would say, skewed, right? You just have to keep it in mind. So I'm going to change my date. I want to reflect this as bad debt, which is an expense, which is a tax deduction in the appropriate year. I haven't filed 2023 yet. And so I'm going to throw this number in here. I actually always use my check number, bad debt. I try to use this field here to be as informative as possible at 23. So bad debt, sorry. So put not bad debt, I swear. Bad debt needs to go into the cash because we didn't actually receive it. Let's write it up. But that does mean we need bad debt in our chart of accounts, which I thought we had. Oh, we have write-off. I think we called it write-off. Oops. Yes, loss write-off. So in money in, this would go to loss write-off, right? Because I didn't actually receive any money for it. It would close out the receivable. So we have one open and then we'll look at it and then we'll wrap up. Wrong statement, wrong financial statement. Still wrong financial statement. So looking at the receivable report at the end of the year is from a tax deduction standpoint. I mean, that's something that I always go through with clients to say, can you please, if I'm not in the database, let's look at it. What's real? What's not real? Did we accidentally invoice for a bunch of stuff? Oh, so here's my number, right? So we already wrote off $686. And so our profit right now is $428,568. But if we go into money in, we are in Mercer, right? They're not paying us for these items. I had to eat the cost. Very, very not good decision, but it happens. Bad debt. There's the year, cash account loss. My date is correct. I want it applicable. I want it to be reflective in 2023. Post payment. So this is what I'm saying. So this is where it can be tricky. Just remember that funds available does increase if you close invoices out to any type of loss or bad debt account. So now if I go back in here and I look, I'm at 419 and this number is 9,000, right? It's $9,000 higher. And it is helping me from a tax standpoint, not necessarily, not always necessarily from a business operational standpoint. But if AR is incorrect, meaning that accounts receivable report is incorrect, try to get it, and you haven't filed taxes yet, this is a really great opportunity to make those corrections. Anthony, I know that was a lot of information today.
Oh, what was that? You broke up. What was that?
Sorry, I said I know there was a lot of information today, so hopefully that was helpful.
Definitely. I think when we do targeted webinars like this, it's most effective. So as usual, Julia, thank you so much for, let me get my slide up here, for putting this on for us. Up on your screens right now, you can see Julia's contact information if you'd like to reach out to her and connect. If you need to connect with us, you can email support@studiodesigner.com or use the chat icon in the support tab in Studio Designer to chat with an agent. Outside of that, good luck with tax prep.
Yeah.
Let us know if you have any questions, and see you all next time. Thanks for coming.
Thank you, everyone. Have a nice rest of your day.
Bye-bye.